Hello, this is Eric Parnell, Chief Market Strategist of Great Value Advisor Group. And as the summer months are heating up, we have a concentration problem brewing in the US stock market. What do I mean by concentration problem? Here's the issue. We have the S&P 500 that's setting new all-time highs seemingly every day. We've had 30 new all-time highs since the start of the year. Yet fewer and fewer stocks are participating in the upside. Let's go back to the end of March when the US stock market previously peaked. 85% of stocks were trading higher than their 50-day moving average, which is a longer-term trend line. That's a positive sign because that means most stocks are participating in the rise of the market. Well, where do we stand today? We're at new highs on the S&P 500 in the middle of June. But now less than 50% of stocks are trading above their 50-day moving average. That means less than half of the stocks are moving to the upside and participating with this broader market advance. Why is this a problem? Because if fewer stocks are driving to the upside, that means if those stocks start to falter, the rest of the market will come down with it. Now there's one stock alone that's driving this concentration more than any other in 2024, and that's NVIDIA. NVIDIA accounts for more than 1/3 of the upside in the S&P 500 so far this year. Another way of saying this is that if you take NVIDIA out of the stock market, it wouldn't be up nearly as much as it is so far this year. It's a problem because if NVIDIA falters, it'll bring the broader market likely down with it. Another issue, there are 3 stocks, NVIDIA, Microsoft, and Apple, that make up more than 21% of the market cap of the S&P 500. What that means is that for index investors, 21 cents of every dollar is being invested in those 3 stocks. And if those 3 stocks fall to the downside, it will bring the broader market down with it. Now, the optimist might hear all this and say, okay, only few stocks are driving the market to the upside. This is a good thing because it leaves a lot of room for the rest of the market to catch up. And that's a definite possibility as we go in through the second half of the year and something that we're going to want to watch for. But the risk that we're dealing with is that if these few stocks that are driving the market, they also start to give up and fall to the downside, then it means that the gains that we've seen so far in 2024 might be at risk. One final important point to mention. The stocks that are driving the market higher here in 2024, most of them can be found in the technology sector. And this is a sector that's been driving the market for many years. As a result, the technology sector now makes up more than 33% of the market cap of the S&P 500. Why is that a problem? Historically, when a sector has gotten to be more than 20% of the market cap of the S&P 500, that's presented a problem not only for the sector, but also for the broader market. So this is going to be an important area to watch as we get into the second half of the year. Because if technology starts to falter, that could lead to unexpected downside in the market as we go through the remainder of the year. Thanks for joining me for this latest market insight, and I look forward to seeing you again soon.